It was there, gazing at the screen of my computer. One question then came up. ChatGPT has already put AI on the market's radar because of all the buzz around it. The real opportunity to make huge money, according to Cathie Wood, the leading expert in AI investing, is in the hidden gems and proprietary data sets. In this regard, no business can match Tesla and the data it has gathered from thousands of drivers. Tesla shares are currently trading at a fraction of their value from this time last year due to worries about the future of the top electric vehicle manufacturer. What does Cathie predict will occur between now and the end of the year? You should listen to her because she is quite optimistic about the company's future. Make sure to hit the like button and subscribe before we go there. For the third time since October, prominent investor Cathie Wood took control of a sizable portion of Tesla stock a few days ago. According to a daily transaction report issued by email, Wood's ARK Invest purchased 74,862 shares of the electric vehicle manufacturer across 3 of her exchange-traded funds with an estimated value of $11.7 million. Tesla is our third largest position in its suite of financial products, after Zoom and Amazon, through the Next Generation Internet Exchange Traded Fund and the Tech in Robotics Exchange Traded Fund. With investor concerns over Musk's Twitter diversion rising over the past few months, Wood's dip buying mania, which was reported by Communications ZM and Precise Science, comes at a bad moment for Tesla. It's important to note that Tesla's stock has recently increased, rising almost 100% from its January low. Cathie's daring dip-buying mania in December has resulted in a huge windfall for ARK. In an interview, Tesla bull Cathie Wood referred to Musk as the company's Renaissance man. She stated that she evaluates Tesla against other automakers and that Tesla unquestionably has an advantage when asked what she expects from the company in 5 years. Tesla is the obvious choice if one only considers electric vehicles and range while evaluating cars. There is no better choice than Tesla. She acknowledged, however, that other automakers, such as BMW and Volkswagen, have advanced significantly in recent years, and that Tesla only performs better than them in terms of power and range. Wood asserts that other automakers will not be able to match or compete with Tesla's combination unless they wish to lose money on their vehicles. When asked about her opinions of large companies that compete with Tesla in the manufacturing of electric vehicles, she emphasized how crucial it is that Tesla has a competitive advantage in every way, both in terms of performance and range. According to Wood, I think as people start to convert from gas-powered to electric and look at the characteristics of the different automobiles, they will completely fail. According to businesses, gas-powered cars will become outdated in the next 5 to 10 years, and the conventional auto industry needs to find a means to switch to electric vehicles, Cathie Wood said in an interview with Yahoo Finance. In a mid-October interview with CNBC, another ARK executive voiced optimism about the top EV business. Asha Keeney recently discussed why ARK has such a positive opinion of Tesla in an interview with Yahoo Finance. Keeney continued, "We have to remember that it's still an early market, but we do see Tesla as one of the market leaders, both in electric vehicles and in autonomous." When asked if she was concerned about Elon Musk's leadership at Tesla, ARK's founder and CEO said she wasn't. Elon Musk, the CEO of Tesla, has been spending too much time on Twitter, which has investors worried. Wood told Yahoo Finance that Elon Musk's main task at Tesla at the moment is preparing the business for the launch of an autonomous taxi platform, which he anticipates will occur in 2024. ARK still expects this to happen within the next year, based on his updated open-source Tesla model. According to the simulations, autonomous taxis are a major driver of Tesla's prospective new revenue stream, contributing more than 50% of the company's projected EBITDA in 2026 and 60% of its estimated value in the same year. Although 57% of the company's income would come from electric vehicles, their profit margins would be far lower than those of the robotaxi. Despite their earlier assertion that Tesla will never be able to offer autonomous ride-hailing, ARK is expected to profit from their renewed confidence in the company's self-driving capabilities. They need to be updated on how the robo-taxi business fits into the strategy, as seen by recent favorable developments. They now anticipate the launch to take place in 2026, 4 years later than Musk initially anticipated, after being persuaded by Tesla's innovations. Additionally, they predict that in 2024, Tesla will start providing commercial autonomous ride-hailing services. 9% of Tesla's model instances indicate that the company will not go mainstream until after the timeframe has gone, even if the robo-taxi becomes popular inside the projected window. The firm probably won't take this chance because Tesla's bottom line is still susceptible. Investors' usage of the updated model significantly increases Tesla's capital efficiency. In 2025, they estimate that Tesla will invest between $6,000 and $8,000 for each additional unit of capacity, compared to the company's estimate from the previous year, when it was spending about $80,000 to bring the Model 3 up to speed. This is a huge improvement. It's likely safe to assume that in 2026, Tesla will pay between $2,000 and $7,500 for each extra capacity unit, as the effectiveness of capital investments has increased. Based on the company's most recent model updates, ARK's naked and bull scenarios suggest that Tesla shares might be worth between $2,900 and $5,800 in 2026. If this happens, only wealthy investors would be able to purchase Tesla stock, making it too expensive for the average American to invest in the business. In August, the ARK Invest team stated that the average of their 1 million simulations is the predicted result. The year that Tesla eventually introduces the robo-taxi, which is probably 2026, has a significant impact on these models. In one scenario, Tesla launches the human-driven ride-hailing service rather than a network of robo-taxis, even in the majority of ARK's lowest price per share situations. ARK has previously described the strategic and tactical benefits of introducing a human-driven ride-hail service, including how it could turn into a lucrative recurring revenue stream prior to Tesla providing a fully autonomous service, despite the fact that Tesla has not made any public commitments to launching either service. If ARK is unable to create a robo-taxi service, it anticipates that its current fleet of human-driven ride-hail vehicles will gradually transition to the autonomous ride-hail network in situations where test launches of a human-driven ride-hail service and solutions for fully autonomous driving could take place concurrently. Even if Tesla's first objective is to solve for complete autonomy in ARK's many higher price per share scenarios, the business may still implement a human-driven ride-hail service within the next 5 years, albeit tuned to 2026 estimates. According to a published post by ARK Invest analysts, ARK believes their internal model is methodologically conservative, and they anticipate that Tesla's stock will trade in 2026 like a mature company rather than a fast-expanding one. Investors and analysts that are optimistic about Tesla's prospects believe the business will continue to dominate the quickly expanding electric vehicle market and even venture into other green energy sectors like energy storage and solar panels. Some investors and analysts, who are more negative, fear that the business will fall short of its promise and end up being just another production company. They believe the company is highly subsidized, overpriced, and susceptible to competition. There is a great deal of variation in Tesla stock price estimates. The Nasdaq has set a 12-month average price objective of $302.50 for Tesla. Although this would represent a respectable increase over the current stock price, it is by no means the most optimistic forecast. $760 is the most optimistic 12-month forecast for Tesla shares. Additionally, according to the most bearish analyst covering Tesla, the stock price will drop to $73 within a year. Naturally, though, these numbers are frequently greatly inflated. In general, different investment communities have rather different perspectives on Tesla's near-term prospects. Because of recent declines, Cathie Wood, for example, believes that now is a perfect time to invest in Tesla shares. Please hit the like button and subscribe if you enjoy this channel and would like to see more entertaining films regarding Tesla stock. I'll see you in the future movie.